I think they can really boil down to a significant moment, which was the original rollout of their 2020 energy transition strategy. This was the quickest, most risky energy transition of all the global energy majors, and it sort of it depicted a pretty quick drop in their upstream hydrocarbon production, a really rapid rollout of their renewables portfolio. And obviously, this has not been taken well by the market. It's undermined the sustainability of their distribution. It's hit their returns, and especially now when we are seeing a sort of backlash against ESG, we're seeing a slowing of energy transition paces across this sector. It hasn't gone down well for BP's financial performance or share valuation.
So, Will, if we go back to that moment in 2020, and I was there when they laid out this new strategy, was that a bad strategy or was it bad timing or some combination?
There is some part of me that has a little bit of sympathy for BP because I think they were trying to do the right thing, and then of course Russia's invasion of Ukraine sort of upended the global energy sector pretty materially. I also think that they were, yes, trying to do the right thing, but doing the right thing isn't always what's best for investors. And I think just comparing it to some of their peers, particularly Shell, which has taken a much more capital disciplined approach. They have a very high bar for acquisitions. They've been very prudent in their energy transition rollout, and we can just see, in the financial performance and how the market is valuing them, which has been the more successful strategy over the last 4 or 5 years.
And just building off of that point, I mean, over the past 5 years, we have BP shares down about 8%, while its peers Shell and Total Energies have gained about a third. So as we think about BP in particular, what really can they do in this moment? What are investors really looking for?
So I think I'll touch on what Elliott is, I think, going to try and do. There's 4 levers that I think Elliott might try and pull here. And the first is transition business spin-off. So this can remove debt and capital intensity of these businesses off the balance sheet. We think that they'll push to focus on growing their oil production more. The current oil production is supposed to be declining about 10% to 2030. We can hope to see that flatten or increase up over that same time period. And I think there could be a push for a board change. The chairman of the board, Helge Lund, has overseen BP since 2017, and compared to peers, there's been pretty underwhelming performance there. And then finally, a primary U.S. listing. I think that this could be a big game changer. It has not only been discussed at BP, but amongst the other European majors. It's seen as a major hurdle to starting to close that valuation gap with Chevron and Exxon.